The great inflation bull market has just begun. So let's check out this blog from Chris Macintosh on Doug Casey's International Man website entitled A Great Bull Market in Inflation Has Just Begun, and it has its origins in ESG. As of 2019, almost 6% of Europe's electricity was generated by burning wood chips, aka trees, which is almost twice the amount of electricity generated by solar. Roughly 30% of the wood chips came from Russia. Sanctions have put a halt to this, and additional supply cannot be made up by the US and Canada, the other two big wood chip suppliers to Europe. Probably know where we are heading here. About 2% of Europe's baseload electricity production is gone, putting additional demand on electricity generated by gas, coal, and nuclear. Burning wood is quite literally retarded. Now, guys, if you guys don't know Chris Macintosh, he's a no BS type of guy. He says it how it is. He does not care about offending people. And I quite like that. You know where you stand with Chris. And if you guys haven't checked out his website, I highly recommend it. He's got some wonderful free blogs, which he can't post on social media because they don't allow it. His website is capitalexploits.co, I think. Or you can just Google capital exploits. But these Muppets have decided their wisdom that wood chips are actually green. In any event, they've now lost 30% of this wonderful green renewable energy source. Gas can't be increased for obvious reasons, and neither can nuclear. Those nuke plants that haven't been shuttered are operating at full capacity. So that leaves coal, which needs to come from South Africa, the US, Indonesia, or Australia. Not that there was much spare capacity from these producers even before the sanctions went on, and that was with Russian thermal coal exports. Oh, what a pickle. When looking at the components of European energy, it is literally impossible to come away without a view that their energy crisis has no realistic viable solutions on the horizon. One would logically think that Europeans would be going hell for leather to bring back online idled nuclear power plants, or at least halt any more being closed, but it would seem that ideals trump logic in Europe. The great doubling down, you'd think by now, folks in Europe and around the world would be waking up to the fact that the belief in renewables powering the planet is what has largely caused the energy crisis, and that doubling down on renewable energy is as bad an idea as putting your special bits in a toaster. I told you. But it seems that this isn't the case. We should not underestimate egos and political ideology. So here's an article from the Financial Times, Why Germany is Resisting Calls to Ease Energy Crunch by Restarting Nuclear Power. From the article, it sounded like a fair question. With sanctions against Russia likely to disrupt Germany's energy supply, I asked MP Mark Bernhard, couldn't Berlin just restart its mothballed nuclear power plants? If we reactivated the 3 plants that were switched off last December, they could, together with the 3 that are still operating, replace all the coal we import from Russia, or 30% of the Russian gas. The alternative for Germany, MP told Olaf Scholz, Germany's chancellor, in the Bundestag earlier this month. Scholz gave him short shift. If the world were as simple as you make out in your question, we'd have a very good life, he said. Yes, Bernard is far from alone in raising the issue. Germany decided to phase out nuclear power after Japan's Fukushima disaster in 2011, and the last reactors were due to be shut down at the end of this year. But with EU sanctions now being imposed on Russia's coal, and some demanding an embargo on its oil and gas, there are growing calls to plug the resulting energy gap with nuclear power. The government says it will not change its position. It cites technical reasons, but the biggest argument could be political, especially for the Greens, who control the economy ministry. It would be suicide for the Greens to say we were wrong about nuclear power, said Thomas O'Donnell, a Germany-based energy analyst and nuclear physicist. They're focused to continue with the old battle plan. And just to give you a taste or reminder of how broad this ideology is, here was an article, not sure where it's from, but Insurer Allianz toughens oil and gas policy, help meet climate goal. These are classic examples of doubling down on ideals and why we believe the energy crisis has only just begun and is unavoidable. Don't lose sight of the fact that what is happening in energy markets now is a function of capital expenditures some 7 years ago. We say 7 years because that is about how long it takes to develop an oil or gas field or a coal mine, assuming you have already discovered the resource, and how long it takes to construct a nuclear power plant. So the commodity capex cycle. We are currently at a 19-year low in commodity capex adjusted for GDP, but this is just because the records only go back 19 years. The graphs depicted below shows what we have been banging on about for a while now. Capex on commodities is at generational lows. Blame it on the climate change, ESG movement, or whatever. The real deal is the increase in supply of commodities, particularly energy, isn't going to occur in any meaningful way for the next 7 years, and that is assuming energy and commodity majors started writing checks today with go abandoned. But they are not. As we discussed above, the supply of commodities and energy today is essentially a function of capex spent 7+ years ago. So if little is being spent on capex now, what then? But what if we could go back further than the graph above? Well, this gives you an appreciation of where we stand. So this is the commodities to equity ratio. Who would have ever thought that the great bull market in inflation that has only just begun had its origins in ESG? And coming in from Markets Insider, Goldman Sachs says oil will roar higher and consumers will feel like crude is at $160 a barrel due to surging gas prices. So Goldman Sachs's new oil price forecast for this summer, that's summer in the US, is to surge to $140 a barrel. So the great inflation bull market has just begun, according to Chris Macintosh, and I, for one, absolutely agree with him. Now, I recently did this video, Silver, Gold, Base Metals, How to Profit from Net Zero. Once again, I shared a blog from Chris Macintosh, and we looked at I discussed the science behind the whole global warming movement. I shared a whole bunch of scientists that you won't hear from mainstream media. Some have won court cases, and I won't mention names because the tubes won't like that. But just go check out Dr. Timothy Ball and who he took to court over a particular hockey stick graph that some ex-vice president used in some propaganda movie, doco. But I also shared some other docos which actually go through all of that. And so we are just making huge mistakes. And folks, this is just the basic economics of energy. It really is. We can live in fantasy world, and we have been, and we still are. And it's now biting us, but it's only just begun. This is the pain. If we don't change the course of this ship right now, we're going to have tremendous pain ahead. And I did this video a couple of months ago, I think, commodity super cycle. And look, one of the reasons why is because of this whole movement, the capex in commodities. So we're transitioning across to this, well, let's just call it the electrification of the economy, or as I call it, rebuildable energy. It's going to require a $173 trillion investment. There is going to be a lot of mining for metals and minerals needed. But there's been no capex in the energy market. Banks won't fund it. Insurers won't insure it. And we've got a big problem, huge problem. And so I see very high energy prices, very high commodity prices. And that's why I'm very bullish this whole sector. And one of the reasons why I still feel and believe that we're an inflationary decade ahead, and why I see a 1973-74 style event where asset prices will tumble, we'll have a market crash, but CPI will remain elevated. And that's because CPI and oil have such a tight correlation over a long period of time. we can go back to the early 70s, and the correlation is there. And so with the CapEx problem, with the lack of investment in finding new oil, coal, gas, you name it, energy prices are going to remain elevated, which is one of the biggest inputs into the economy, which means CPI, in my opinion, is going to remain elevated. Central banks, if they want to get this CPI under control, because they can't print barrels of oil, they can't print new coal mines, they're going to have to send us into a depression. They're going to have to raise rates so high, absolutely destroy demand, absolutely destroy debt, which is, when you destroy debt, when you default on debt, you destroy currency, and you print currency one way. Well, that's one way to destroy currency. Well, that is the way to destroy currency, is simply to default. And what do? Raise rates. But they're going to have to raise rates really high to get this CPI under control. This is all central planners' fault. This is this whole ideology, this ESG movement, which some say is a corporate social credit score. So we've already implemented a quasi credit score in the corporate sector. So what do you guys think? Do you think that we've just started this bull market in inflation? And how are you guys positioning? Obviously, there's going to be a massive devaluation of currency, and that's also bullish for gold and silver, in my opinion. But when people wake up and find out that this is going to devastate people's savings, people's wages, then we might see another rush. Well, I think we will see another rush into gold and silver like we saw in the 1970s. But that's just my opinion. What do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. Take care, guys, and I'll see you all again on another episode of Finance Uncut.